Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we'll look at review questions 7 through 10. Let's begin with review question number 7. Sue is a bartender at an Italian restaurant. John is a barback at the restaurant. John changes empty beer kegs, replaces ice, and takes dirty glassware to the dishwasher. John is not tipped directly by customers, but Sue gives John a percentage of her tips at the end of each shift. Last Thursday, Sue gave John a $40 tip out at the end of the workday. True or false? Because John has to report the $40 as tip income, Sue does not have to report receiving the $40 from customers. The answer is true. Sue only has to report the tips that she retains. She does not have to report tips that she passes on to other employees. Now let's take a look at review question number 8. How long should an employee who regularly receives tip income maintain old tip diaries and other income records? A. For at least 1 year after the tax return is filed. B. For at least 3 years after the tax return is filed. C. For at least 10 years after the tax return is filed. Or D. Indefinitely or as long as possible. The answer is B. Because tax returns are amendable and auditable for 3 years, taxpayers should maintain tip diaries and other income records for at least that long. Now let's look at review question number 9. Sarah is a caddy at a golf course. Sarah keeps a daily tip diary and provides her employer with a written tip income statement for each calendar month. By which date does Sarah have to turn in her written statement for February to her employer? A. By March 10, unless March 10 is a weekend or a legal holiday. B. By April 10, unless April 10 is a weekend or a legal holiday. C. By September 10, unless September 10 is a weekend or a legal holiday. Or D. By December 31st. The answer is A. If March 10 is a Saturday, Sunday, or legal holiday, Sarah can give the statement to her employer on the next business day. Finally, let's take a look at review question number 10. True or false? If an employee has not calculated and reported tip income to his or her employer over the course of the year, then the employee must use IRS Form 4137 to calculate and report taxes owed. The answer is true. After completing Form 4137, the form must be attached to the federal tax return.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.